Hello ladies and gentlemen, this is a very important video for all those members, whether they are EA subscribers or Signal Services subscribers, because in this video I will guide you how do you read the backtest and how do you select your risks accordingly, because it's very important that you have a realistic expectation of how the EA or Signal Services are going to work. There is no way possible that you do not incur some losses or some drawdowns or some stagnation periods and you remain profitable each and every day, each and every month. This is just simply not possible. There is no trading system in the world which can generate profit month by month. In fact, each and every trading system is bound to fail sooner or later because the market keeps on changing every day. That's why I keep on researching and keep on changing my strategies with respect to the market. All right. So with all being said, let me show you how do you select the which of the pairs you should receive signals to, which of the pairs you should run your live accounts on. How do you gather the stats and what you should expect from the expert advisor or the signals. All right, because for example, this is a USD CAD back test, and what is a back test is I've told already in certain posts that the expert advisor has run since from 2010 all the way to this year, all the way to April, I think. Okay, so I used tick data suite for back testing this, and that actually gave me a very good modeling quality, and it's almost as equal to the real market. Also, the parameters of my EA, they are not depending on any indicator, so the live test results are exactly equal to the back test. All right, so in order to trade USD Canadian in the long run, you need to sustain the maximum drawdown of 33.47%. Now this drawdown, okay, this drawdown happened over here, you can see here. Now before this period, it ran smoothly from 2010 all the way to I think 2016. There was a very little drawdown, hardly like 5 to 6% or 8 to 10%, but a time came when this system was tested and the system remained successful, gave a little bit of drawdown, and again you can see a pretty smooth upward linear curve here. So in order to book around 2,275 profit on a $1,000 deposit, I think it's around 227%. You need to sustain this 33.47% of the drawdown if you want to book this amount of profit. So what you should expect from an EA, you should expect that, okay, normally it doesn't go into this much drawdown. 33.4% drawdown is not that much if you are running a system for the past 10 years. Do keep that in mind, because even if the system goes into like 70 or 80 or 90% of the drawdown but survives that market, if it's running for the like past 5 to 10 years, that system, it means that that system is reliable and you can put your trust into it. But 33.47% over the course of 10 years is nothing. So if you want to trade USD Canadian, you need to have patience for this much drawdown. This is the first parameter which you should be seeing even before you look at the total net profit. Now you will see the profit factor. Anything over 1 is that means that the system is profitable. The third parameter is that you should see the number of trades. Now, once you're running this USD CAD pair, it doesn't mean that it's going to trade every day, every week, or every month. There can be some dry months. There can be some even there can be some months where the activity will be much higher. All right, so you should expect that it doesn't trade that much, and it only takes trade like 187 over the course of like 10 years, which is which means that every year it took around, I think this, let's put this 12 years divided by 10, sorry, 187 divided by 12 years is around 15 trades. So it means that on average it took 16 or 15 trades per year. All right, so you should have a realistic expectation of that. And this is the win ratio which you should see that you will incur. And now the very next important parameter is that how much maximum consecutive loss it went to. So it went into like minus $500 over here. At that time the equity was around 2000, so that turned out to be a 33.47% drawdown. So you should be able to sustain this minus $500 on a $1,000 deposit. Okay, not $1,000 because at that time the equity was around 2000. So you should be able to sustain this drawdown, or you should be able to sustain these amount of losses. So if you are happy with the stats, if you're happy with the drawdown, that okay, I'm willing to take this much drawdown and I'm willing to take this much of consecutive losses, and I'm pretty much okay with the frequency of the trades, then you should trade this pair, and you can use the dot set file which I will provide you. If you're using an expert advisor, if you're using signal services, then you should follow the method in the very first video, that how the signals are generated, in the second video how the loss is calculated, and etc. Everything is pretty much explained there, so you can follow that and you can use the signals from USD Canadian. All right, so let's visit another back test so that how you should select the pair. Now this is Brent oil versus US dollar. You can see the graph here, and now you should see number one, you should see the maximal drawdown is just 26%. But the very most important factor is the amount of period it went into. For example, I can very much run back test from here all the way to here, and it will just show you the stats of like 5% or 10% drawdown. That's it. So the higher the time period is, the more reliable the back test and more reliable, everything, all the stats are. If you're running a back test for like 2 years, then those results are not that much reliable. If you're running it for more than like 3 years or 5 years, 10 years is phenomenal. Okay, it's pretty awesome that if it's running for like 10 years. So if the backtest is 10 years old, that means that is trustworthy, and all these stats are trustworthy. And now in this backtest, you will see the profit factor is about 1.42, which is pretty good. Maximum drawdown it ever went to was like 26%, I think, over here. Other than that, it just went into like 5 to 10% drawdown, but this was the maximum ever which it took. And the consecutive losses were like minus 2,831. I think it happened right over here at 17K. Do keep in mind that this initial deposit is $10,000. So the total net profit is 6,893. I think it's around like 7 times more than the deposit. So the profit is pretty huge on this. So in order to book this profit, you need to have patience for this much drawdown, and you need to sustain this much drawdown, and also these amount of consecutive losses which occurred, there were 5. So this is how you will analyze any pair which you want to trade or take signals for, and it's totally on your disposal how many pairs you want to trade, how many pairs for which you want to take the signals for. It is totally on your disposal. So but do keep in mind that for every pair, if you're trading Brent oil, then for this pair you need to sustain all the stats. Okay, you need to do that. So now this is Oddcat, and it's again ran from the 10 years old back test, and you can see the profit factor is pretty high, and the maximum drawdown was 60% for this one, and it happened right here. So over the course of like 10 years, a time comes when market tests you to the fullest. Normally, on average, every system gets broken down in a year or two. There are very few systems which survive more than that. So if you're running a test from like past 10 years, then this drawdown is not that much. So do keep that in mind. Please stop believing in the fairy tales where you would be saying where uh, people expect to book like 20%, 50% profit per month by putting just 10% of the money into the market. No, market doesn't work like that. For retail traders, it's always a loss. There are only hardly 5% of the traders booking profits from this market. Rest all are just just losing in this market. So if you want to trade out Canadian, you should know that once in the past 10 years it went to this much of amount of the drawdown, but it survived, and again you can see the linear curve all the way up. So you can see the profit, the amount of profit. Initial deposit was $10,000. Total net profit is $48,000, and you can see the maximum consecutive amount of losses and each and everything. So total trades were 273 over the course of 10 years, which is a little bit more than the previous pair we checked. So you should know that this can go into this amount of drawdown, but at the end of the day, it will be booking you this amount of profit. So your balance should be able to sustain this drawdown and these amount of losses. Okay, so if you go into like 10% drawdown for this Oddcat and you say, oh man, I cannot do this, I mean it wasn't supposed to go down like that, then you shouldn't be following either the signals for this pair, or you should be running this on your if you're a EA subscriber, then you should be running it on your EA. Now this is odd gen again. As you can see, this odd Canadian. All right, odd gen. I have also a back test for this, which goes all the way to 10 years back, and the maximum drawdown for that was like 35 or 40%. But if you run it since 2020, it only went into like hardly 11% of the drawdown. But that doesn't mean that it will not increase. That's why the time period is important. The time period is very, very important. You should select the pairs which have at least 3 years of backtest, or a huge history. But you can also select odd gen on the basis of these stats since 2020, because 2020 was an extremely volatile year and very, very difficult year to trade. All those trading strategies which survived in 2020 are most likely to survive for quite a while, because that was the most difficult year to trade. So it sustained that, it survived that, and again the profit is 20%, and maximum drawdown was 11%. And you can see all the stats I've explained earlier. So that's how you're gonna select the pairs which you want to trade on EA, or if you want to get a signals for. So this is again since from 2020. Now Ethereum US dollar. Now a very important point to be noted here, that you see this pair, it wasn't profitable from 2018 to I think around 5 to 6 months, or 2 to 3 months. I think it wasn't profitable at all. It just kept on hovering here. So if you're trading Ethereum US dollar, right? If you're trading US Ethereum and Ethereum, then you should be able to know that this pair can go into the stagnations. Okay, it will exactly behave like this. Okay, there will be no magic. It will exactly behave like this, like exactly like the back tests. All right, but you can see the maximum drawdown was 21%, and the total profit was pretty decent, around 18% since from 2018. The problem is that I do not have any of the tick data on IC markets for Ethereum before 2018. So we have to backtest. We have to run it on live account only. Now this is US 30. As you can see, the maximum drawdown is 62%, and the backtest is pretty reliable. It's from 2015, but the amount of profit is 16,903, which is pretty huge. So in order to book this profit, you need to sustain this drawdown. So that's how you are going to select the pairs. You have to see your risk appetite. Okay, you need to provide enough margin, enough equity to each and every pair you're trading, and you should expect the results only if you're willing to take the maximum, the extremities of any pair. Okay, you have to follow these stats in order to use either the signal services or the EA. If you're not comfortable with this amount of drawdown, then do not trade US 30. Okay, so that's it for this video. Please do see each and every stat, and do keep in mind that this will happen. This drawdown, it didn't happen for the past. If I just remove this area, the maximum drawdown will be like 5 to 10%, which normally EA vendors do, that they just remove the bad sectors and show a very strong, very good linear curve. I don't do that. You can also backtest it if you want to. You can backtest on a very high quality, with a very high modeling quality like tick data, or you can get the set file and you can backtest it on any time frame you want to, and you will get the exact same results. So that's it for this video. I hope that it was pretty clear to you, and at the end of this video I would like to conclude that number of pairs you trade, amount of risk you take, it all depends upon you. It all depends upon your risk appetite. Okay, also see the EA parameters on which this is trading. It is utilizing 1% per trade, and it's using the recovery mechanism which I explained in the lot size calculation video. Okay, so on the basis of that, these are the stats. For all of the pairs, it's doing the same. It's risking 1% per trade, and it's recovering if the trade is a loser. Previous trade is a loser, then it's recovering that trade. So this video has been pretty much detailed. If you watched it up till here, then you must be pretty clear about it, right? So you can also see the settings. If you're an EA user, you can also see the settings from here too, that how much money it is putting in. You can see the risk percent is putting in 1% for this one. All right, so how much you are willing to risk, how much drawdown you're willing to take, only select the pairs, certain pairs, or take the signals for those pairs if you're willing to take that. If you're not willing to take that, or if you are riding in hopes that this will never happen with me, this drawdown, and I will book this amount of profit without sustaining this drawdown, then I don't know. I mean, that's not possible. Okay, so be realistic and follow the realistic goals and a realistic target. So take care, everyone. See you in the next video. Bye bye.